afternoon, good evening, traders from across the globe, and welcome to the 1,811th installment of Short-Term Trading Live with Oscar Carboni. Of course, that would be me. Traders, this 1,811th video is coming at you on a Monday night, but it's not quite for trading on Tuesday. That would be July 31st, 2018. This video is more geared for many of the Omniacs who have known me since I started producing this Omni and on YouTube videos. I came up with the Omni, well, I've been doing this Omni since I'm 18 years old. About 20, I started to slowly perfect it. You know, and in my 20s, I got the Omni, what I think is what it turned out to be today after years of working on it. While I was back there, I see you holding up the sign. Okay, I'll do that first. Trading is very risky. Please know this. You must have risk capital to lose if you are going to play this game. You must put your stops in first. Believe me, not every trade turns out to be a winner. In any event, traders, let me get right to the point. This video is for the traders who have been following me since I started this endeavor, showing you these Omni videos in 2006. 2006-07, I was calling for the markets to go gangbusters higher. In the middle of 2007, I said something is not right, and Omni, thank you, God blessed us with being able to actually call the high of the market right before it crashed. We did that on video for months on end. We were giving out the number. We hit that number, and it crashed. Then, thank you, Omni, thank you, sir, upstairs, I was able to identify the crash low. My Omni crash low came in at 668. The S&P's low of the crash was 666. So it was interesting that I was able to see the stock market getting ready to crack and finally bottom out. During the time it cracked and bottomed, I was blessed enough to be in this industry making decent money on these calls, and with all the traders around me, we did quite well, and I took the money that we made trading, and however we made money in the business, I took every dollar I made practically, and I did something with it. In 2009, 10, 11, I was telling my Omniacs, go out and buy real estate. This is your moment. Take every dollar we made, calling the crash correctly. A lot of you Omniacs were with me, and go out and buy real estate. And I put my money where my mouth was, and I went out and spent my money on real estate, several properties here in New York or wherever I was at the time. I spent my money on real estate, just like I told people to do when real estate was falling down and people were running away from it. But it stopped falling between 2010 and 11, and it started to bottom out. I went and bought properties, and that's what this video is about. It is about the traders and investors who actually followed me into real estate back in 2000, in the 2009, 10, 11 era. If you recall, during that time I was doing videos. Where's the recession, traders? I'll put a link under this video. There's a link below me right now. Where's the recession? Where's the recession is what I was saying. It is time to go out and spend your money. So I was trying to get people to follow me, and many of you did. And that brings me to the topics on the board. So for trading, on 7/31, we have a red Omni for emini, S&P, and NASDAQ. We'll deal with that at my site, livewithoscar.com. This is an animal of a different color. I want to explain something to you. Making money in real estate is all about your timing and interest rates. It's all about timing and interest rates. If you were smart, your timing was fantastic. If you bought real estate between 2008 and 11, even 12, fantastic, even up till 15, fantastic time to buy. Interest rates very low, if not anything at all, your interest rates. Is it time to start taking profits? Well, if we timed it correctly on the way in, is it now time that it's starting to rally up to maybe take profits? Now, let me explain something to you. If you followed me into real estate between 2009 and 12, it might be prudent to follow me as I ease back out, and here's why I wanted to present you with this video this evening. I've got proof on the charts that interest rates will not stop going up for a while. I know that that is going to, at some point, slow down real estate. And if you bought real estate when time was great to buy, you're supposed to sell that real estate out while it's time to sell. While it's a great seller's market, you're supposed to sell your real estate. If you allow it to mushroom to the top, everyone will want to sell at the same time. So, personally, my story I want to share with you. I'm going to grab a little water here. I'm going to share this with you because many of you actually followed me into real estate purchases, and now it's time to tell you what I'm going to do with my personal life. I am going to sell property now. The same properties that I purchased when I told you OMNI to purchase your properties, I am now going to start to sell those properties off. I'm in the process of selling one property here in Las Vegas. In 4 days, I'm getting on a plane and I'm going to New York City where I have an interest in another property, and no matter what's going on with real estate, I am going to sell that as well, take my interest out of that property. When I come back to Vegas, I am probably going to put a third property up for sale, and I think it is time to reap the cash back in. Now, why would I think that? Traders, let me tell you right now, trading is like a series of elevators. You get in a trade. So, okay, let me take you back for a moment. Step into an elevator bank. Step into a building in Manhattan. You have an elevator bank, series of elevators. Those elevators go up and down. And if you get into a trade, you know that you're in a 10-floor building. You get in on the second floor because you can't buy soybeans for nothing. So you buy them on the second floor. The building can only go to 10 floors. You're on the 8th floor. You get out of your trade. That's the way this works. That's the way I've always looked at trading. It's like a series of elevator banks in a building in Manhattan or in Chicago. I look at real estate the exact same way. The exact same way. When you buy a piece of real estate, you are not buying it for free. So if you are in a 10-story building with elevators that go to the 10th floor, and you buy on the 2nd or 3rd floor, because no one gets real estate for free, and you can only go to the 10th floor, and you're on the 7th, possibly 8th floor, aren't you supposed to get off that elevator? Because someone will buy it from you. Someone will get on the elevator at 8, expecting to go to 10, but once it goes to 10, there's nowhere else it can go but back down. And that's the way I'm looking at real estate. That's the way I look at trading, and that's the way I view the purchases that I made with you guys. We did it together. I told you guys the purchases I was making when I was making them. Tried to convince my OMNI to make them with me. It is now time for me to start easing out of those very same purchases. So that's what I've got planned. Trading properties, it is the same. They are like a series of elevators. Now remember this. Fund managers loaded up with residential rental properties from 2009 to 2015. They bought everything in America that you can buy. You better believe they'll be the first ones running for the exits if we get to a spot where real estate is finally topping out. Now, I am not calling the top in real estate. I am telling you that you got plenty of room to go. Sell your real estate to other people who will take that room and carry it forward before we do mushroom at the top somewhere and we all try to sell our real estate together. Now, why would I think this? The same reasoning why I thought you should buy real estate. I use analysis. With that in mind, I am now going to show you a series of charts that will actually prove out why I think interest rates will continue higher, and that will probably slow down real estate at some point, and you need to have taken profits before that point. Now, with all that going on, let me have that newspaper, sir. Interesting article in Barron's this weekend. Great newspaper. Interesting article. Here's what it says. I won't read the whole article. I'm going to have to break out the binoculars for this one. But I will read you a small briefing. And here's what this says, and this is very, very interesting. So, as I'm reading, I went, I knew I've been reading these numbers going down. I know I'm seeing stuff in the charts. I know there's a reason why I'm not listening to anyone else in the world. I'm going to start getting out of my real estate. So, here's what Barron says for this weekend. Sagging home sales. Right here in Barron's. You can read it for yourself. Sagging home sales. U.S. existing home sales fell some 0.6% in June from the prior month and down 2.2% from a year earlier. Okay. Home sales have fallen in 5 of the first 6 months of this year. Striking, this says, striking in an economy with strong growth and falling jobless claims. New home sales fell 5.3% in June. New home sales, existing home sales, are starting to have a little bit of trouble. This is not the top, but at some point, real estate will slow down a little bit. I will have gotten off the elevator and out of my trade long before that happens to me. Now, I'm about to show you the charts, and you'll see why it's almost unequivocal looking at the proof in the charts that bonds or interest rates will continue to rise. With no further ado, let's go look at some charts. Traders, this is a chart of the weekly bond market, 30-year T-bonds. Each green bar represents a full week's worth of trading, so this is a very long-term chart. This is what I like to call a shoulder, a head, and a shoulder, or a head and shoulders formation. This generally will tell you that the market is going to break down, and you can calculate how far if you understand how the head and shoulders works. Coming out of this head and shoulders, we have a bear flag, and it looks like at some point we will break out of that bear flag, which usually produces more of a down move. Now, if you don't know how this works, if you have interest rates on one side and you have bonds on the other, if this were a teeter-totter, if bonds go down, interest rates go up. That is the way it works, even if the Fed does nothing. If bonds go down, interest rates go up inherently because of the price of bonds moving down, moves the yields up in interest rates. Bonds are moving down. The formation is set. Now you're coming out of a bear flag. These are your 30-year bonds. 30-year bonds and 10-year bonds are how they fix our mortgages in this country, right? So that's your 30-year bonds. 10-year notes. Left shoulder, head, right shoulder. The difference is the 10-year notes are in charge of this right now. It is what the banks mostly use for interest rate movement and for selling mortgages, and it is leading the market. And it already had its head and shoulders, and it broke down into a bear flag. Then it broke down into a secondary bear flag, and we're already falling out of that bear flag. Bonds only had the first flag, didn't even get to the second flag yet. Now, it's not exactly symmetrical, but this is a fine art, not a science. This does not have to be symmetrical. It has to look like a head and shoulders that took a long time to form. Just like the 30-year bonds, you can see that in your 10 years. No problem at all. Interest rates, kids, are going up. That is unequivocal proof. So you see the 30s and the 10s. These are your 5-year notes. It has been going down for a long time inside of this channel. In fact, the channel was even tighter, but it breached a little. So we extended the channel out here, but your channel's really in here. You built a huge bear flag. You broke down out of that bear flag. You built another bear flag. So, albeit it's got one little breakthrough, but that happens. These are anomalies in flags. But you are down here now, already below that bear flag. 30-year looks terrible as far as a chart's concerned, which means interest rates go higher. 10-year look terrible as far as long-term charts concerned, interest rates go higher. 5 years, look at that. Now let's go even shorter term. Look at the 2-year. 2-year notes, weekly. You were in this red support line, lasted a very long time. It was actually a bit of a channel if you go back further, but for now we'll call it support. You broke that support, you are now in this tailspin channel. Look at that just falling apart, your 2-year notes. 2-year notes and 10-year notes are on a collision course. When that's happened in the past, that has led to a real estate market slowdown, maybe a year and a half later. So I am not saying anything happens now, but it takes time to ease out of real estate. You don't just get out tomorrow. Maybe you've got the next year, year and a half to ease out. I'm going to start almost immediately. Then this will keep the real estate expensive and will keep the bond yields moving higher. Why? This is the U.S. dollar. The U.S. dollar has what I like to call a classic cup and handle formation. There's your cup, there's your handle. This overall is a bullish formation for the future. So yes, you can mess around for 200, 300, 400 points in the handle, but when it goes, it's bullish for the future. If interest rates continue to move higher, many funds in many countries will pour their money into U.S. dollars so they can utilize those U.S. dollars to buy U.S. bonds and U.S. assets like real estate. So the dollar moving up keeps the markets moving higher for now, keeps real estate buoyant, and certainly continues to make interest rates go higher. And if you ask me, it is time to slowly take your time and get your price, ease out of your real estate. So traders, you've seen the charts. You've got my technical reasoning why. I've got the red arrow up for interest rates. Well, I should say for bonds, because when bonds go down, interest rates go up. And that's what I'm expecting over time. And this video is my gift to the Omniacs who've been loyal to me over the years, who believed in me, who followed me into real estate. Now it is time for you to possibly follow me out. Please don't let me influence your decisions, because if this isn't a moment to start taking profits and it goes up for the next 100 years, I don't want you to kill me. I'm looking at it as a series of elevator banks. I got in the elevator, it moved up, I want out on the floor I expected to get out on. I don't care if the real estate continues higher. Like as if I bought gold and it went to my profit objective and I got out, I don't care if it goes higher. That was my game. That was my profit objective. Same thing I am now doing in my real estate. If you'd like to know more about it, and this is my personal heart going out to you, Omniacs, I am speaking from my heart here. I'm just telling you what it is I'm doing because I feel responsible if you followed me in when the time was good to buy. All right, traders, that's just about it. Come see me at livewithoscar.com. Come to my live trading room. I will be there when I go to New York to fix up that property I'm getting ready to sell. I will be running the Omnis from New York. I've got my office up there, so don't sweat it. You won't miss me. You'll just see me painting a little, maybe. Got to get the place together. You know, hey, I work hard. I'll get my fingers into this mess. I'll fix and do what I need to do. But real estate, it is time for me to start exiting, and I hope if you followed me in, maybe this video could possibly make you decide to follow me back out. All right, traders, livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do to help keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Traders, I hope this is a gift to you. I hope it helps you make your decisions moving forward. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.